Hi, does the stock market make you feel a little seasick these days? I'm Chris Connor with Clarity Wealth on our Friday Fireside Chat. I mentioned in the past that I've been in this business for 40 years, and right now the volatility is a little bit discerning to some, although it's quite ordinary from if you were an investor in the markets. Let me explain. Usually every year we have some sort of a 5% correction, which is where we're in now. And we don't know if it's going to be 5%. It could be 10, it could be 20. We don't know until it's over. Sort of like when the pilot brings the plane down a little bit to avoid turbulence, then brings it back up and keeps flying. Because we don't know. So, how do we handle this? First and foremost, the biggest thing I think you can do is just try to ignore it. If you feel compelled to be drawn into the concern over money, you need to read the book, The Psychology of Money by Morgan Housel. In there, he talks about the fact that volatility is the price of admission if you are in the stock markets. Ask us, we'll get you that book. Secondly, we came into this year, in my opinion, with the market being overvalued. When I go into a store, I don't go to a rack of clothes that says, hey, it's 20% more than it should be. I don't go there. I go to the sale rack. Might explain this. So that's where I think we were. I think the market's overvalued, and it might still be a little overvalued. Two ways the market maintains overvaluedness is either the earnings come up or the price of the stock comes down. Over time, it's a speed bump for most people. I was in the markets in 87 when the market crashed. Market went up. Tech wreck, markets crashed. Market went up. COVID, markets crashed. Market went up. There's a trend there. And the trend is try to ignore the intermediate and term that we're in right now. Let me give you two more thoughts. First one, if you own Ford or you own a mutual fund that has Ford in it, Ford pays a good dividend, 6%. If the stock is 9 or 11, if you're my age, little gray hair there, you bought it for the dividend. You don't care if the stock is 9 or 11. You want it to go up. But as long as it's paying its dividend, you're happy. Now, if you own Apple's a great company, a little bit overvalued, been using a lot of their cash hoard to buy their stock back at all-time highs. Not so sure that's a very brilliant move, but only time will tell. So, in the interim, a diversified portfolio, very important. Do not get sucked up into the hype of, oh my God, it's going to be tariffs, it's going to be terrible, the world's going to come to an end. I'll tell you what, the world's going to come to an end. The last thing you're going to care about stock market. So if you have questions, if you're concerned about the markets in any way, reach out to us. We're here to help. We've all been through it. We're all sort of have our immunizations to it. And I hope that this will provide you a little bit of solace. It's just almost standard operating procedure for this stuff to happen. And I hope you have a great weekend. Take good care.